Welcome to Market Call. I'm Marilla Fernandez. Javed Mirza on the show with us today. He's a technical strategist at Raymond James, taking your questions on technical analysis. Here's how to reach us. 1-855-326-6266 if you would like to phone in. You can email your questions as well. marketcall@bnnbloomberg.ca. Javed, thanks for coming in.
Thanks for having me.
Just expectation for summer. Do things slow down? Is volume sort of low in the summer? What typically happens?
Yeah, so normally people start going on holiday around the August time frame, and typically seasonality is poor through August, and then normally September is the weakest month of the year. So when we last chatted a month ago, we were talking about we had this seasonal rally in place, or intermediate term, which we talk about as being 3 to 6 months, that we had this rally in place in August. No change in view. What I would highlight, though, is now, given the fact that a lot of market indices have broken out to new highs, investors understandably are starting to get bullish, and we're seeing early signs that the boat is now tilting towards the more bullish side, which suggests starting to get a little bit cautious here. Okay, so you mentioned seasonality, and you said September is usually the most volatile period. Why is that? That, I don't know. It's been, historically, there's been a number of large corrections that have taken place during that month. Historically, it's the only month that has an actual negative return. And does either the slowdown in August or the volatility in September provide opportunity for investors? Yeah, so it depends where you are in the market cycle. So I'll kind of walk back where we've been over the last couple of years. So in the end of, at the start of 2022, we were talking about this 4-year cycle reset that we saw coming at some point in the first half of the year. And then we got that through into the fall of 2022. And then we were telling clients, look, we think a new 4-year cycle is taking hold. And then in our 2023 outlook, we're telling clients, look, this new 4-year cycle. And when we talk about the 4-year cycle, it's essentially the business cycle. So you have this expansion phase, typically lasts 2 to 3 years. And then you have the contraction phase that can last anywhere 3, 6 months to a year. So at the start of this year, we were cautious, and we've been on BNN talking about that because we were worried that we were getting to the end of that cycle that began in October 2022. So I think the volatility that we saw from February to April, and there was a variety of negative divergences we were seeing internally in the market. So I think the correction from February to April, that hit our price target. Normally, every 3 to 5 years, you have this really big 15 to 20% correction. Every year, you typically have these like 5 to 7% turbulence moves. But the correction we saw from April till now has been really quick. And normally that takes more time. So that kind of threw us off balance in May. But then at the end of May, we're saying, look, we think a new 4-year cycle is starting. And we highlighted 6 technical positives that corroborated that, and we still see that. We're seeing the TSX, NASDAQ, S&P break out to new highs. In our view, the last piece of the puzzle is the Dow Jones Industrial Average. And once it does that, I think you're going to see more of a sideways trading range before we get a correction. But to come back to your original question, and the reason I want to frame that is because if we're starting a new cycle, then yes, definitely, this pullback that's coming is going to be a great opportunity to add exposure. Got it. Okay, we're going to take a quick break, line up some phone calls and some emails for you. Javed Mirza of Raymond James taking your questions for technical analysis today. Here's our phone number and our email. We're back in a moment. Welcome back. We are going straight to a question from Bruce. He has written in, says, could I please have your analysis on Cisco? Cisco, of course, we'll pull up the chart in a moment, but let's take a look at what the line chart looks like now. Yeah, so Cisco has been a leader here. We like it a lot. It's broken out to new highs, and technically it looks strong. So given what we just talked about, that a new 4-year cycle is starting, looks like it's started to, and I'll just zoom in so the viewers can see this, it's kind of started to consolidate and move sideways after this big leg up here. That doesn't surprise me at all. We're seeing that start to happen in a lot of the leaders that have broken out to new highs, is that they're started consolidating here, and especially given what we gave you with the backdrop that I think, we're likely to see a little bit of a movement higher, but then a consolidation. So what I would highlight on this stock for Bruce, I like it a lot. I'd be waiting for a pullback, and I'd be looking to add exposure.
Got it. Okay. Typically, when you start as well, do you start with a 5 or 10-year chart when you're looking at a stock, or does it depend?
So great question, Marella. So it depends. Right now, what we're trying to zone in on is that new cycle and where the stocks are sitting. So that's why I'm trying to use the last 3 to 4 years. If there's a big secular move underway, then I want to pull up like a 10-year monthly chart just to frame where things are. And then once we get into the nitty-gritty and the more tactical, that's where I want to pull up like a 6-month or 9-month daily chart.
Got it. Okay, let's go back to the phone lines. We have Chris on the line. He's calling today from from Victoria, BC. Hi, Chris.
Good morning, Marella, and good morning, Javed. Thank you so much for taking my call. Marella, I just want to say one of the best on the switchboard today.
Thank you.
So props to that individual. And Javed, if I could please get your opinion on Archer Daniels Midland. I'm looking at the long chart and similar, of course, with a Nutrien. And I'm wondering if you see this as a good entry point for, say, a 5-year time horizon.
Okay, so let's pull up Archer Daniels, have a look at that.
Yeah, so maybe to Morella's question, we can pull up a 5-year or 10-year chart. But the key takeaway here is I really like this chart here at these levels. So it's breaking this longer term here, this chart. And Marella, I think this is a really good example where you can really see in the chart what's going on here. So we've got this really big longer term downtrend. We're breaking it, similar setup to Nutrien. It's in the consumer staple space, but especially now, the reason I like it is over the last 2 months, investors have been dumping all the defensive areas of the market. So they've been really in the pits. And so I really like adding exposure to some of the more defensive areas in the market because they're on sale, because we've started this new cycle, and especially as we come into this corrective phase, which we think is looming over, call it the next 6-10 weeks or so. Really like this name, really like this bigger long-term downtrend break, and I think you get paid 4 or 5% dividend yield to wait on this.
How do you like Archer Daniels compared to Nutrien?
So if we can pull up Nutrien, so that's ticker NTR, I think they're going to be the similar setup here.
Okay, we'll give that a second and pull that up. But generally, at this point, would you invest in either?
Let's just say it's in my best ideas segment later on today.
Got it. So, okay, we will hang on for that.
So I think that's a little
that little
there.
preview.
Yeah.
Let's go back to the phone lines. And Joseph is on the line. He's calling us today from Montreal. Hi, Joseph.
Hello, thanks for taking my call. Javed, let's get your opinion on Telecommunications. It broke out of a sideways trading range for a few months there, and it's leading one of the leading telecom sectors in Canada right now. But the reason why I haven't lunged into it yet is because when it broke out, it jumped into overbought territory on the RSI, and it's been riding the top of a Bollinger Band for about the same amount of time, a few weeks there. When you see such overboughtedness, like on overbought RSI and right in the top of a Bollinger Band, how do you interpret that? Is that really off-putting to you? Do you put more weight into two measures that may be screaming overbought? So I want to get your opinion on Cogeco and then generally on RSI overbought status. Thanks.
Okay, so let's start with Cogeco.
Yeah, start with Cogeco. I like it here. Mainly that's also because Rogers and Bell have been really underperforming. TELUS is starting to turn up. The other name in this space that's been a leader is Quebecor. Now the problem is Quebecor and Cogeco are more on the small cap side, so it's really tough for larger institutional investors to step in there. Now, to Joseph's question on RSI and Bollinger Band, that's a positive sign. It's telling you that there's strength and power in momentum. So I totally get his concerns in terms of, you want to be cautious when you're buying stuff at overbought levels, but if we're correct, and that's why this framing is really important, if we're correct that we're starting a new cycle, then there should be a fair amount of upside, both in terms of price and time in this space. And once you overlay that with the fact that we think there's some sort of correction brewing over the next couple of months, I like picking away at some of the more defensive plays here. So Cogeco, I like it. I like the fact that it's breaking out to new relative highs here as well. And right now, in our work, on a relative and absolute basis in terms of price momentum, it's a leader in the space. So I like it.
Got it. Okay, let's get one more caller in. John is on the line calling from Gander, Newfoundland. Hi, John.
Hi, how are you? Quick question on Skeena Resources, gold company in Canada, touted as a takeover target. It's been doing extremely well since the price of gold has risen, plus I think everything is on schedule and under budget at their mine. So it looks really strong, lots of higher analyst targets on it. I was wondering what you think of it. And as a side note, AYA, if you had time to look at that one too.
Okay, so let's get to Skeena on the line chart at 2065. Today has dropped a little bit. Pretty dramatic breakout over the past, year?
Yeah.
I guess year?
Yeah. So, John, quick question. Like the technicals here, looks really strong. And I think to frame this question, the better chart to actually pull up is XGD. So if we can pull up XGD or GDX, what that is that's the broader gold index. And so what I want to highlight is there. So you can see this is what we're seeing right now is a rising tide floats all boats. So this is gold equities. They've done extremely well. What I would flag here is over the last couple of weeks, we've started to see them consolidate and move sideways and stall. Our technical work is pulling up the fact that you're starting to see deteriorating relative performance. We're starting to see institutional selling. So last week, we actually recommended that clients start trimming exposure to gold and gold stocks. I really like gold longer term, especially what we're seeing with BRICS and a move in our view back towards a gold standard. And that's why some of the things we're going to talk about is the US dollar now looks to be in a new secular downtrend. Gold, I think longer term is going to be better bid. That's one of the many reasons I'm very bullish on Canada. But in the near term, it's extended. The other thing I'd like to point out is we've got negative seasonality from August, September, October. Those are actually really poor seasonal months for gold. So for any gold investor here, you've had an awesome run, still like the setup longer term. But if you're a tactical trader, I'd definitely be trimming a little bit here. And if you're looking to buy gold, I would wait. I know it's the toughest thing to do is just sit on your hands. But I think over the next, call it month and a half, 2 months, I think you're going to get a more attractive entry point. So bringing that back to Skeena, great looking chart longer term. If we can pull up Skeena, I can just highlight where I think it could eventually settle back to. So I think there's going to be some first support around that 18 level and then call it here around 15 as well. But definitely see further near-term downside, not company specific. It's the same way a rising tide floats all boats. It's the sector, exactly. So we think that the gold and gold equities are going to come under pressure here over the next couple of months.
Got it. Okay, we're going to take a quick break. Javed Mirza of Raymond James taking your questions today on technical analysis. We're back in a moment. Welcome back. Thanks for joining us. Let's go to Harry, who's been waiting on the line with his question in Montreal. Hi, Harry.
Yeah, hi. Thank you for taking my call, Javed, and congratulations for the show. I would like to have your thinking about MDA space that is going up. Thank you.
Okay, so MDA space has been moving up. It's up to 37, almost 90 today. Slow crawl here, but what's your take?
I like it. So we actually recommended it, I think about a month ago, back towards the start of June to clients, just telling them that what we were seeing, price momentum, relative strength, volume, all of those things were telling us that we were going to break out to new all-time highs here. So we've seen that. I think it's one of these, depending how tactical you want to be, our broader view is I think there's some sort of corrective phase coming, but if you don't have exposure, I don't mind nibbling a little bit here and then adding more exposure on weakness. But really like this chart, and it's a leader in the Canadian industrial space.
Do you think that the weakness is sector-wise or for this particular stock?
It's going to be for the broader market. I think basically there's going to be some sort of catalyst in the next 6 to 8 weeks that's going to put the market under pressure. I think what it actually is, what we from our work suggest, it looks like U.S. rates and the dollar are going to see a bit of a bounce here. And so I think that's going to put commodities under pressure. I think that's why we're seeing gold under pressure here today. But if yields are moving up, then broadly speaking, I think this is also going to put pressure on equities generally.
Got it. Okay, let's move on to the next caller. Alfred is on the line. He has a question today. What's your question, Alfred?
Question is regarding Berkshire Hathaway Class B shares. They have not been participating in the market rallies lately. Your view on a 1 year, 3 year, 5 year outlook. Thank you.
Okay, thank you for the question. Very well-known stock. We'll pull up that chart. And what are your thoughts on Berkshire Hathaway?
Yeah, it's a great long-term chart, great leadership. It's pulled back here. As we highlighted at the start of the show, a lot of the more defensive areas of the market, or the more boring areas, they've been sold in order to provide funds for the more exciting risk-on areas of the market. This pullback here, I'd say over the last 2 months, is going to be a great entry point. So I like it. I'd start nibbling here. I think there's going to be more broader weakness in the market, and I'd use that as well. But I definitely don't mind adding exposure here to this long-term winning.
Got it. Let's go back to the phone lines then. John's on the line from Victoria with a question. Hi, John.
Hi, how are you doing?
Good, thank you.
Good. My question is, the 5 Canadian banks, looking at the charts, TD Bank has taken off like a rocket ship. Royal Commerce and BMO breaking out, Scotiabank lagging, and then I put the Bollinger Bands on these, and they're both at the top of their range. They're in their moving average envelope, but they're just nipping to get out of their Bollinger Bands. Are they short, or is it time to climb aboard for the ride?
Okay, is there a specific bank that you like?
Yeah, so TD looks pretty strong. As to John's point, it's broken out here to new highs along with the other Canadian banks. I think the air is starting to get a little bit rarefied at these levels. You can't see it here, but if I drew the volume, what you would notice is that volume has started to decline here. And so this suggests that I don't mind nibbling a little bit if you don't have exposure. But the bottom line is, I think they've had a big run. I think they're set up for some sort of correction. So I'd wait for that correction before I really began to step in size. We're very bullish on Canada here for the next couple of years, especially what we've seen with the government, they're talking about infrastructure development. All of that should be broadly positive for the economy, and that should flow through into the banks. So all of this is positive, and especially if we're starting a new cycle, this really suggests using weakness here in the coming months to add exposure.
Are you tempered at all by Washington and what has yet to be resolved with the trade deal with Canada?
Yeah, but I think one positive thing for Canada as a whole is we've been fixated south of the border, and I think we're starting to see signs that we're looking east to Europe and west to Asia, and I think that's really positive. I think we had our first natural gas shipment or something
about a week ago.
Yeah,
yes.
to China or something,
yes,
or Japan,
correct,
right?
To China.
So I think Canada's an amazing country. I think it's the best country in the world, and the fact that we're opening and looking away, like we're looking globally now instead of just to the south, is going to be really positive for Canada.
Got it. Okay, let's get to another caller. Frank is on the line. He's calling from Oakville, Ontario. Hi, Frank.
Hi, good afternoon. My question is about how currencies can be used to sort of get some alpha on a stock. So 10 years ago, I started converting a lot of my Canadian stocks onto the U.S. side. So they were reporting in U.S. dollars, and I was getting a lift as the U.S. dollar was lifting. But my current thinking is that I think the Canadian dollar is going to strengthen because I think the U.S. dollar is going to weaken because of the direction the United States is taking. And my question is, if I were to convert a U.S. Stock into its Canadian version, would that be helpful? Thank you.
Okay.
I think so. So I agree with your thinking here, Frank. I think basically with all the policies that we've seen out of the U.S., they are essentially kind of debasing their currency. And it's really positive. And I think the counterweight to that is what we're seeing with BRICS. And I've been talking to clients about this for a while, is this shift that we're seeing here towards this more global north, global south, and a shift back to a dollar, a gold standard. All of these are going to be positive, I think, and flow through into Canada and the currency, especially given what we have in terms of natural resources. So to that point, I do like what we're doing here. And I mean, that was the peak 10 years ago. That was a great time to convert Canadian dollars to US dollars and ride the wave. And I think we're starting to see early signs that it's time to flip the other way. I think the Canadian dollar from here, the path of least resistance is up.
Do you think he should wait a little while longer to do that then, or step in at this point?
I don't mind stepping in here. I think, especially given our view over the next, I do it in tranches. I don't like, unless there's a compelling reason, I don't like doing it all in one shot. So I do think the US dollar is going to rally here over, call it, the next 6 to 8 weeks. But I do think that is a bounce within a new longer-term secular downtrend in the US dollar. And I see, as we're chatting, the team's doing an amazing job in the back pulling up the charts. So what I would highlight here is now we have this series of lower highs and lower lows, and that's the definition of a downtrend. So can we pull up a 10-year chart on the dollar? And I think that will really drive home the point of what we're seeing here. Perfect.
Okay, yep, there we go.
Yeah, they're working their magic in the back. So if you go even back further than this, like back to 2010, you can see that essentially the dollar has been in a bigger uptrend. But what I wanted to flag, they're working their magic. Yeah, so you can see here, look at this big longer term uptrend. But now for the first time, we're starting to see lower highs and lower lows. So if this continues, this could be a bigger secular shift. So we saw something similar to this in 2000, where essentially the Canadian dollar went from like 62 or 63 cents to over here in 2008, 2009 to over par. So I know people are, I don't want to get people too excited. I don't want to get people too excited, but it definitely looks like we're going to see further strength in the Canadian dollar vis-a-vis the US dollar.
Got it. Okay, we're going to take a quick break. We'll share Javed's past picks when we come back. Welcome back. Time now to take a look at Javed's past picks from July 12th of 2024, so almost a year ago. At the time, you picked Metro, owner of the grocery store across the country. Is that right? Metro,
yeah,
that Metro,
yeah.
79.25. When you picked it a year ago, now up to 106.30. So 34% upside return, 36%. Total return upside. Do you remember why you picked Metro back then?
I do, yeah. So we can look at it at the charts here. I think it was just on the cusp of breaking out of this longer term trading range. And the other thing is, given where we were in the cycle, I wanted to get some staples / defensive exposure. So this couldn't have worked out better. So really happy with this pick. What
led to the breakout? What were you seeing that led to the breakout? Because obviously, a year ago, that's what you were seeing. So what made you go? Basically, everything that we have our own internal work and process. So we were seeing price momentum improve. We were seeing relative strength accelerate versus the TSX comp set. When we talk about relative strength, what it's saying is assume a benchmark value of 100. That means you're performing in line with the other stocks. If you're below it, it means you're underperforming. What we're really looking for is outperformers, because our clients are institutional accounts, pension funds, and they want to beat the benchmark, essentially. That's what everyone wants to do. And so we started to see that people were really buying Metro hand over fist, and we're starting to see institutions stepping in and buying. All of us was telling us, hey, look, it's time to step in and add exposure here. Got it. Okay, let's get to your next past pick from July of last year. Hydro One, Asia on the TSX. At the time, $40.30, now up to $49.24, 22% upside, total return 25% upside. Power supplier, of course, and we'll pull up that chart in a second, but what do you like about this? Was it a defensive move as well? It's the exact same setup as Metro. So we were where we were in the cycle, we were starting to get a little bit antsy, and so we were looking at potential correction coming. And so we were looking for dividend yield, defense, and the same characteristics that we were seeing. So relative strength was picking up, price momentum improving, and it looked like it was poised to break out to new highs. So this was another pick that we were pretty happy with and worked out pretty well. With those two, would you hold on to them at this point? I would. They're long-term winners. The long-term charts look good, and especially, I think they're actually
pretty timely here as well, because what we've been talking about is, and you can see that here on Hydro One, is over the last, call it, it's down 10% actually. So if we were on talking about this a month ago, we would have been up another 10%. But portfolio managers have been selling the more defensive areas of the market to raise cash in order to buy offense. So as a result, the price on these has decreased. So I think now is a pretty attractive longer-term entry point.
Got it. Let's get to your third pick from last year. Hydro One. Sorry, not Hydro One. Choice Properties REIT is your last pick on the TSX. 1357. At the time you recommended it a year ago, 1471. So an 8% upside, 14% total return upside. Do you still like Choice Properties?
I do, but it's. I think there's other better areas to deploy your money. So it's the same setup. I think, unless I'm mistaken, they do. They're the REIT for Loblaws and a variety of grocery stores. So they're like the most boring clients.
Sure.
It was another. I was looking for
boring but steady.
Yeah, boring but steady.
Yeah.
Exactly. So I think this is a great long-term hold for people, retirees who are looking for safe income. So I do like it in that regard, but this is not really going to see too much price appreciation. So I'm pretty happy with that total return. But I think given that we're going to see a corrective phase, but more importantly, if we're correct that yields are going to rise here, I think a lot of the REITs are going to come under near-term pressure here over, call it, the next 6 to 8 weeks. And that's when I'd be looking to step in and buy. So if you do want to buy this name, then I'd be using that weakness in the next 6 to 8 weeks to buy.
Got it. Okay, we are going to leave it there. We're going to line up more phone calls and emails for Javed Mirza of Raymond James, taking your questions on technical analysis. Back in a moment. Welcome back, and thanks for joining us. Bob's holding on the line. He's got a question, and he's in Toronto. Hi, Bob.
Hi, Marilla. Great show as always. Javed, I'm just wondering if you can comment on CargoJet. I'd appreciate your analysis. Thank you.
Okay, let's have a look at CargoJet.
Perfect. Yeah, so it's been in this bigger downtrend. It's been a laggard, and it's starting to catch up here. So I don't mind nibbling a little bit here, and this is more predicated on our bigger cycle call that we're starting a new cycle, then that should be broadly positive for the economy and stocks in general. Given our view that there's going to be some sort of corrective phase coming, I think you'll see some near-term weakness, but we've seen this in a lot of the Canadian transports, and so I'd refer to the rails as well. I know the rails are running today, but if we pull up CNR, it's going to be a very similar chart. So I definitely don't mind adding exposure. I think this is playing the long game. I think, 2.5 years from now, you'll see. So this is essentially the same chart as CargoJet. So it's starting to turn up. This is the long game, so I definitely don't mind adding exposure. And that's why our really bigger cycle work really helps us a lot. Because if we didn't know, or if we weren't bullish on the economy or market broadly, then it'd be tougher to make that call. But as a result, we're happy to make that call and say, look, in the next 2 years, it's very likely CNR is going to try and break out to new all-time prices.
Yeah, and CargoJet has the agreement with Amazon, which they just extended. That's benefiting them as well. Okay, let's go to Gordon on the line from Victoria with a question. Hi, Gordon.
Good morning. Enghouse had a bad quarter and a 15% result down. What are your thoughts?
Okay, thank you for the question. Enghouse is engineering. Let's take a look at their line chart here. They have been sliding most of the year.
Yeah.
What do you see?
If we can pull up a 5 or 10 year chart, and I'll show you what I see. Yeah, so I'm just going to draw a line here, and I think it's going to speak volumes, unfortunately. So it remains in a longer-term downtrend. This is not a place I'd be looking to put money to work, unfortunately.
Okay, so at this point, if you were invested in it, would you hang on to that investment?
I don't. I think there's going to be better places for your money to go to work. It's your little soldiers, and you want them working on positive projects, not these kind of make-work projects.
Got it. Okay, let's go back to the phone lines. John is on the line. He's calling from London, Ontario. Hi, John.
Hi, Marilla. Hello, Javed. Javed, my question is on Honeywell, an industrial stock. It is going to split into 2 or 3 entities probably later this year, which favored General Electric, who did that back 3 years ago, and each of those entities is really doing well. They're both industrial stocks. They both made improvements to management, and they both get the Trump nod. What is the chart telling me about Honeywell? Thanks very much.
Okay. Usually when they split up this way, I mean, I'm sure it can go either way, but how does it work?
Yeah, so there'll be segments that are the best segment to buy, and then there'll be a segment they dump all the garbage into and they offload onto investors. So what I will corroborate with what John is saying is that everything here looks very positive. You've broken out to new highs. You've got a series of higher highs and higher lows in place. Really like the technicals here, and especially if what John is saying, like this, you're seeing the benefits of the, what is it, the beautiful bill or
the one big beautiful bill,
whatever,
yes.
Yeah, whatever it is.
That's what you're saying. Donald Trump approved. Okay.
Yeah, but the market's liking it, and that's all you care about. The market essentially is like a beauty contest. You just have to pick the winners.
Got it. Beauty contest. All right. Let's go to Amin. He's on the line from Ottawa with a question. Hi, Amin.
Good afternoon, Mr. Mirza. I am heavily invested in gold and oil. Oil has gone down. What are your views on both oil and gold? Okay. I have Agnico Eagle, Alamos Gold, and Barrick.
So looking for specific stocks in gold, but we talked about gold a little bit off the top.
I'll reiterate my view. The gold equities have had a really good run, and I think they're due for a breather or consolidation. And so gold here is coming under pressure. I think probably around 3,000 is ultimately the downside potential. We're already at 3,300, so call it another 10% from where we were. The rally here has been capped at 3,500, so do like it as we highlighted longer term, and we have some really long-term 75-year charts that tell us something significant is happening with gold. But in the near term, it's extended, and I think over the next couple of months, it's going to trend lower and consolidate. Same thing with gold equities. I do like them longer term. I'd be looking to add exposure, call it September, October, once they've gone through this hiccup. And then energy stocks, given where we are in the cycle, I think that's in terms of the worst calls we've made over the last year and a half. I think we were early last year. We were looking at some energy stocks, call it July, August, September. That was more predicated on our broader cycle work. We were looking for more upside potential into the end of the cycle. It's kind of in the sideways trading range, and what I don't like is we follow the commitment of trader data. So they publish this in the US. It comes out every Friday at 3:30. What they do is they aggregate hedge fund positioning and commercial hedgers. Commercial hedgers are the producers. They typically have the most inside info. So right now, hedge funds have been buying, but commercials have been reducing exposure. This is on the futures market, and you normally want to be following the commercials. They're known as the smart money. And so I'm cautiously optimistic on energy, but I think it's going to be dead money for the next couple of months. So,
very quickly, because he was talking about specific stock in the gold sector. Is there anything you like specifically?
So it's funny because one of the names he highlighted, Kinross, we actually highlighted as reduced just because it started to weaken technically. And like I said, this is all part of this whole pullback in the gold space. Agnico has been a standout superstar in the gold space, but as we've talked about a couple of times, it's going to be a rising tide that floats all boats, and it's going to be the inverse case where because gold equities broadly are under pressure, you're going to see a lot of these names start to underperform.
Got it. Okay, we're going to take another quick break. More of your phone calls when we come back. Stay tuned. Welcome back. Let's go to Ron, who's been holding on the line with a question. Hi, Ron.
Hello, Marilla. Hello, Javed. I think you guys are both professionals. I appreciate what you're doing for the investor community. My question is on Tesla. I was looking at it for a 1 year hold. Thank you.
that Tesla, I'm not sure how this stock works for your system when you look at it, because it's such a volatile stock connected to Elon Musk personally.
Yeah, so I think, and that's why I really like what we do, because what we're ultimately doing is investors are voting with their dollars, and that's what you see in the chart. So people can talk all the time, but this shows you what they're actually doing. So it's actually super helpful. So here's what we've got. We've got a high here. We've got a high here. In order for us to get really constructive, and where I'd be looking to avoid the volatility you were talking about, is if we can break out above this high here, call it around 360. Now, the only issue is, as we've been talking about, there's a little bit of a ticking clock here, because as we get deeper into August, we think that correction is coming. So I think the best thing here, just on this name, is kind of wait it out, and then if it does break out to above this level, maybe add a little bit of exposure so you don't have FOMO and then you don't buy it like literally on the top tick. But right now, you're still in this uptrend, still a lot of volatility, and that's where I prefer to wait and see what happens. Is if we can clear this resistance level here, call it around 350, 360.
And he was talking about holding it for a year. What do you think about that?
Yeah, if we're starting a new cycle, and that's why I said like our cycle work really helps us frame what we're doing and why. If we're starting a new cycle, that should see us have upside into the second half of 2027, first half of 2028. So then that should be a broad tailwind for this area, which is the more cyclical, this is consumer discretionary, into the more cyclically oriented areas of the market. So.
Got it. Okay. Let's go to another caller. We have Red on the line today with a question. Hi, Red.
Hi. What I'm looking at is chem trade logistics. I bought it in April and got stopped out around close to where it's consolidating right now. Looks like 1130 is trying to break. You think it's a good time to buy? It's been sitting there for at least 2 months.
Yeah. Okay. Great question. So I don't mind opening a little position here as a starter. That way, as we discussed on Tesla, you don't feel like you have FOMO and you feel forced to rip it all in at the peak. So I don't mind adding a little bit exposure here, and then especially if we break out to new highs, that's pretty positive. As Morella and I were discussing on the last stock, the issue is that I think there's a bigger correction coming, call in the next 6 to 8 weeks. So I'd be definitely keeping some powder dry to add. But especially if we break out above these recent highs here, around 12, I'd definitely be looking to add exposure.
Okay, so hope that helps you out, Red. We're going to move on to Jim, who has a question. He's calling from New Brunswick today. Hi, Jim.
Hi there. Great show, you people. Thanks. My question is on Telus specifically, but also maybe Bell. I see they're both starting to move a little bit. What's your opinion on that?
Okay, so Bell is a parent company of this channel. They did move up today past, I think they're at 32, and that's a lot of movement because they haven't moved very much in quite a while. You like Telus in the telecommunications space?
I do. So it's been the leader. It's the one that's come off the bottom. And the thing is about all of these names, they have pretty strong dividend yields. So people are looking, they want boring and safe. So I really like the setup here. It looks like a bit of a reverse head and shoulders pattern here. So if you break out above this neckline, the way this works here is, so here's kind of the neckline, here's the head, here's the shoulder, here's the shoulder. This is the measuring target, and what you do is you add this on top. So from what we're seeing here, you definitely have upside potential to call it 25, 26 here on Telus. I do like it. It's the leader in the space, and we run our own model, and it's being picked up as the leader out of the big three. So it's going to be Telus, Rogers, and Bell. So if we pull up Bell here.
Okay, let's go to an email then right now, just before we have to take a break. You want to see the Bell graph?
Yeah, we can pull up
Bell. So let's pull up the Bell graph and take a look just for comparison's sake before we go to an email. We have BC at 32.49 today. So it's just beginning to do that turnaround we talked about.
Exactly. And the big hump, like if it continues to put in this series of higher highs and higher lows, so it is turning around, it is positive. There is a big catch-up trade that I think there is to be had. And then I think the next really big resistance level is, I think, call it around 42. Anyways, around these lows. So there's definitely some pretty good upside here. So call it 20%. But for right now, it remains the laggard out of the big three. So if I had to rank them, it'd be TELUS, then Rogers, and then Bell.
Okay. Let's leave it there for this block. We're going to take a quick break. We'll have new picks from Javed when we come back. Stay tuned. All right, time now for new top picks from Javed. We're going to start with Toromont Industries on the TSX. They, of course, are a construction type. I think you're looking at the infrastructure plays in Canada moving ahead.
It. Yeah.
Talk to me about that.
Yeah, so I like it here. I think our fundamental analyst on this, Steve Hansen, he has it market perform rated. And last time we were on, I think we had recommended Finning, which has had like a rocket ship of a run. I think there's a catch-up trade there. I think you're going to see it's going to test the upper highs here. And if we pull up copper, I think this is more one of the derivative plays here. If we're correct in terms of starting a new cycle, then copper and copper plays, like the more cyclical commodities, should participate. And that's really what we're seeing here as well. So you've kind of got this new defined uptrend series of higher highs, higher lows. I do think there's going to be some near-term consolidation here, especially if we think the US dollar is going to rally. But ultimately, if we're correct on a new cycle starting, copper should be a big beneficiary, and then that should translate into demand for infrastructure, heavy machinery, and that leads us into Toromont.
Yeah, and you like your next pick is also related, is Stella Jones.
Yeah.
In the same sort of space with pressure treated wood, that kind of thing.
Yeah.
Same idea here?
Yeah, railroad ties. I think this is, a pretty steady business, and especially if we can pull up maybe like a 10-year chart or something, it'll really show you, like, we've had that big correction here into April, which I think was a great buying opportunity. But when you pull up the longer term chart here, I mean, this is more recently, but in general, you've kind of got a breakout of this range, and the trend is up and to the right, which is what you want to see. So I really like this chart a lot.
Much of this is based on the idea that Ottawa's jumping in sort of up to its head with infrastructure build out across the country.
Yeah.
Is this a sector you think generally will outperform in the next number of years, or do you think there will be some winners and some static?
I think there's always going to be some losers or some laggards, I would say, and that's why the names I've tried to pick, apart from Toromont, I think there's a catch-up trade there, but Stella is definitely the leader within that the forestry products space.
How do you decide? For example, as we mentioned, if there's build-out, how do you decide sort of which sector you think is going to win?
Yeah, so what we do is underneath the surface, we dissect everything. We're looking at relative performance, like where are the people who are the most informed, where are they putting their money to work, and at the margin, what our technical work is telling us is that these are the areas of the market that they're putting their money to work. So that's what we're doing. Is you don't see on the screen, but we have all these different screens and models that we run, and they really tell us, hey, look, this is where the smart money is looking to buy. Yeah, is going, and that's ultimately we're just following them.
Following the trend. Okay, let's get to your last pick then, which is Nutrien, which we have talked about sort of on and off on this show, because it's really been, it seemed to be doing a turnaround at one point, and then may have stalled a little bit. Why do you like Nutrien moving forward?
So same thing. If we can pull up a 10-year chart, this is the same play with Archer Daniel Midlands, where we had this really big multi-year downtrend. It looks like it's reversing this and turning up. And essentially, this looks like something is changing. And that's one of the big jobs we have as technical analysts is letting people know, hey, look, we won't always know why. Always hindsight is 2020. So you'll find out the reasons why later. But right now, this is telling us that something is changing. So one of the famous George Soros quotes that he had as an investor, which I like a lot, is invest now, investigate later. So when you see something shifting, there's a reason for it. You won't necessarily know the reasons. There's going to be a lot of smart people who do know the reasons, and they're putting their money to work, and you'll find out the reasons later.
The fall off that you saw, though, was quite dramatic in the Nutrien chart.
Yeah.
In that same realm of investigate. later. What led to that?
You're talking about this
From
year?
2022 all the way sort of down.
That's a great question. Our fundamental guy, Steve Hansen, he would have all the insights and he would have a great idea on what precipitated that. But from what we're seeing in our work is that investors, after having dumped the stock or shied away from it for 3 years, are now starting to come back. So, and that's really piques our attention and interest.
Got it. Okay. We do have to leave it there. Appreciate your time coming in. Thanks very much. We'll see you again soon. And we will see you again as well. Thanks for joining us on Market Call. We'll see you again tomorrow. A look at the markets as we head to a break.